ReInsurance Business recently had the pleasure of being on the ground at the 2025 Bermuda Risk Summit, where we caught up with reinsurance and insurance executives to hear their perspectives on the vital questions facing the industry today. In this episode of ReInsurance Business TV, we ask, where do you think reinsurance is going right and wrong with technology, including GenAI?
Yeah, absolutely. Well, I think one of the big topics at the moment is GenAI. I'm a huge advocate of it. I've run lots of large language models on my MacBook and I really love the potential that it's got for our industry. And I think quite often, especially GenAI, is the answer before anyone's really thought about what the question is. There's definitely applications for things like GenAI within our industry, and Gallagher did a recent InsurTech review, their Q4 report, and there's some excellent coverage there as to what's working and what's not working. I think generally speaking, what we're seeing most impact with our customers is where they're taking a look at their current processes, really taking a step back and understanding where they might be able to improve or streamline those processes, but then also introducing things like automation into their workflow. And of course, GenAI may have a really good role to play within that. But really things like data ingestion, data processing, all those things that are quite manual and take time, actually being able to introduce some more automation to those things, really helping to streamline that flow.
We have noticed a large influx of new submissions coming into Bermuda. And with AI, we're able to process them a lot more efficiently, do the research that we need to do, because a lot of these companies have complex exposures. So using artificial intelligence has really helped our efficiency as underwriters.
It's hard for us to say where the market's doing things wrong. I think, there's a lot of fortune in being a company that started in 2021. We're digitally native, we're paperless, and we've got flexibility. So one of the best things we've tried is just experimenting, making sure there's accountability. There's someone in charge of what you're trying to do, and there's accountability to that specific person, and you can run experiments quickly and fail fast. And that's an easy thing to say, but it's a very hard thing to do in a large organization. In Banyan, we're nimble and fast, and so to give you examples, the rating models we've built would have taken us years inside of a large organization. We've got a data science team in Cambridge, Massachusetts. We've got an operational excellence team in Canada. We've got a back office in India, and we've got people through the chain. So there's always a human in the loop. But what that gives us an availability to do is to run experiments with different SaaS providers. We think insurance, the future is SaaS. The entire world has gone to a SaaS model. It's a bit like, warehousing those people in-house is a bit like trying to build Microsoft Office. There's so many fantastic providers, and some of them are outside insurance. We think that all the best technology is inside insurance. The truth is, we're finding fantastic talent outside of insurance who loves to take a challenge on. An example is we're working with technology providers who are doing work with large airlines, large multinational companies, figuring out hospital issues and air traffic control. Surely figuring out insurance problems is well within their capability, and we're finding there's a lot of people who are there to help. So we're excited about the future. We're running processes very quickly. We're integrating generative AI into our underwriting process on a daily basis. And again, another example, if you're going into a D&O underwriting meeting, just as one case example, that would take potentially hours and hours of reading the Ks and the Qs, following up with different analyst reports, and then trying to synthesize that into your own thoughts. What we're doing is helping our underwriters figure out the prompts to get there. And so being able to ask a very highly trained generative AI system the right questions is almost as big a skill as underwriting in itself. And then you can go to that meeting with the knowledge that is far, far broader than you could do in 3 to 4 hours of work. So the world's changing. It's just whether everyone can try and keep up, and we're doing as best as we can to get ahead of the curve.
Yeah, this is one that I deal with on a daily basis, of course, given the job title and where I'm at. I think it really stems back to where the regime is going from a capital framework. So I'll touch on this briefly for the viewers that are maybe not actuaries and not familiar with kind of the nuts and bolts of it. So there's something called the BEL, or the best estimate liability, that folks are hoping to kind of optimize on. And what that is the assets such that your surplus at the end of the projection, such that they equal zero, is actually now your liability reserve. So On other regimes, you essentially model your assets and liabilities together across the projection, and there's nuanced calculations throughout that. You get your capital component at the very end. The way that the Bell calculation works is such that you have your assets at the start and your liabilities at the start. You model them both out, and you're essentially doing a goal seek on the surplus such that your surplus at the end of the projection equals 0. A lot of fancy words. What that means is your assets and liabilities are tied more closely than ever to how you're essentially doing that reserve for the capital. So because of that, folks are saying, hey, if I can choose better assets to back my liabilities, then I can reduce the actual capital amount I need to hold. So from a technology perspective, we're doing our best to enable folks to make that easy for them. And what that means in practice is when folks are thinking about, hey, should I take this bond XYZ or this mortgage 1, 2, 3 to back my liability portfolio, what we're trying to do and have done is develop an optimization routine so that they can select and kind of cherry pick out those assets to best match their liabilities. How folks are doing this today is generally through kind of extracting different liability metrics out of it. There's key rate durations, convexity, all sorts of nuanced metrics that folks are getting out of their liability cash flows, as well as just the cash flows themselves, and trying to couple those and marry them up with the assets that they have access to. And I think that's where, you'll probably speak with a number of other folks on the asset management space that are doing great work here in terms of how they're getting those assets available to the insurance companies from a private perspective. And there's all sorts of kind of nuanced components that the BMA has put around the guardrails of this. So for example, you have a 10% cap on some of your alternative assets. So there's things like that that are kind of embedded in the calculation from what a company can hold from a portfolio standpoint. So from a technology standpoint, what we're trying to do is remove a lot of the guess and check work from those companies in terms of, hey, can I hold this or should I hold that? It kind of just spits out an answer for you, and then you can have the ability to analyze those results on the back end. It may not be that you always want to optimize on the capital requirements. If you have a sense that maybe interest rates spike in the near future, maybe you want to have some hedges appropriated for that. So what we're trying to enable is allowing for different risks and the analysis of those risks, because different folks have different risk profiles, and we just want to enable what makes the company most comfortable for them. As far as a GenAI perspective, we're doing good work in the space in terms of automating some of the model builds, as well as allowing the model build to be an easier process. So as I mentioned, with all these fancy terms and optimization and privatized assets, these models can get quite complex. So what we want to do is simplify it as much as we can for the end user. And what that means is trying to automate some of these deployments from a model build perspective. And that's where I think the GenAI can move from an actuarial technology standpoint is, not only making those model builds easier, but then also the analysis of those builds. So once that's models spit out, how can you analyze which components that you're tweaking in that optimization that had the biggest impact on your capital requirements? Right now, a lot of that is manual, but if you throw something like predictive analytics and other tools at it, you can say, hey, if I, decrease my bond ratio from, 60% to 50%, does that have a bigger impact than if I tweak my mortgage percent up? So you can play around with some of those constraints and, find which is going to have the biggest impact, not only on your Bell calculation, but to different sensitivities that you're testing as well.
I think from Accord's perspective, we have 36,000 members globally, and they're spread across brokers, carriers, reinsurers, and also technology vendors as well. And that's over 100 plus countries. So we get some pretty good insight into what's going on from a technology, a digitalization perspective. And having been in the industry for 30 plus years, I've also seen some different levels of success in the marketplace. I think for me, one of the sort of fundamental positives that seems to be coming out of the industry is an understanding that to do digitalization and do it correctly, you need to really have a foundational base layer, which is the standards or standardization. So at Accord, one of our standards is a standard called GRLC, which stands for Global Reinsurance and Large Commercial, very relevant to Bermuda, the specialty markets around the world. And that standard effectively has been put together by the reinsurance community, effectively, because they fully really understand the value of standards and the efficiencies that they can bring. Certainly in terms of data quality, in terms of the speeding up of processes, the elimination of unallocated cash, and we're talking some significant cost savings there as well across the industry. So when I look at those standards, they actually cover the full life cycle of an insurance end to end. So you have placing, accounting, and claims. So when you look at that process, you've got pre-bind and post-bind. So not only have you got the sort of efficiency gains in organisations that can be leveraged, you've also got the opportunities to start looking at how do you distribute products wider globally as well, and have a consistent framework to that. So I think once you've got that foundational layer in place, what you can then do is start to automate things and then start to complement it with newer technologies that's out there. Clearly AI is a significant game changer, and GenAI. So ultimately you can start to look at non-standardized data that's in the marketplace, standardize that in terms of intake and submissions, to be able to then share that data in a standardized way. So I think the industry globally has sort of woken up to that and the benefits, because it's not new. Those standards have been around for a number of years and have been used successfully, certainly in Europe, in the insurance community and with reinsurers. So I think now there's an opportunity to, and we're seeing it now, to really drive the adoption of those standards and complement it with technology as well. So it seems, certainly from my perspective, we're the furthest forward I think we've ever been in the speciality industry to start driving that change. So I think that's where I see a lot of opportunity. At Accord, we have the Accord Solutions Group, who are effectively looking to operationalise those standards with some digital accelerators. So we've launched a solution called Adept, which is effectively a data exchange. And that's one of the reasons we're in Bermuda this week, to launch that hub in association with ABIA, the association for the industry. So exciting times ahead.